Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown, along with my co-host, Nam Phan of Pacific Private Money and Patty Cohen of Compass Realty. Mark Hanf is off today. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate. Give it away during the show. That certificate is not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin. Today's trivia theme is entertainment. And okay, so this show is going to air on Saturday. We're recording it on Wednesday, the day after the election. It's sort of up in the air at this point. And the way go ahead.
It is up in the air, but my candidate lost.
Which one was that?
Silent. Kanye.
Yeah.
Actually, he was running for vice president.
Vice president, yeah. He was running for vice president. You know, it's funny, though, I'm kind of looking at this, and the way I kind of look at it now, I don't want it to be super neck and neck close from the standpoint. I know that there's still some states up in the air and all that. I'd rather one or the other, just take the rest of them.
Yeah.
There's no real looking at the courts to get involved with this, because even if you go, oh, there's totally voter fraud in, let's say, Pennsylvania, and you go, okay, well, take Pennsylvania. It still doesn't give you enough votes. You know what I mean?
Right.
It's uncertainty that's going to drive everybody batty.
Yeah,
right,
and uncertainty over a period of time.
Yeah.
You know, so.
Yeah, because
sorry,
I mean, even in a like run-of-the-mill election, it still has kind of a chilling effect on the market because there's uncertainty what's going to happen. But if this is a long, drawn-out, beat-em-up battle, and we've got the pandemic, and that's rising to the heights we've not seen before, then buyers are going to be kind of chilled. Like, I don't have to do this. Maybe I should wait. And
right.
You know, it's time, and yeah.
Now the
also,
well, let me just add this real quickly. As of Wednesday, after the market closed, the market was up 1.34%, 367 points. So either the market is predicting that there's going to be a full winner, you know, an easy winner, or they think one candidate was better than the other, right?
Right. Yeah, you know, but going back to your point, Edward, of you know, this dragging out, I think people are. I for one am just kind of done with the whole drama of it.
Yes.
And irrespective of who wins, you know, we just need to move forward. You know, as and get. I mean, obviously, there's a lot of differences. There's a lot of divisiveness, but I just think there's a lot of fatigue too, and maybe you know, now's the time where people just realize, you know, what's the benefits of, you know, the opposition, like what points do they bring, because people are so dug in the trenches with their own beliefs. There's got to be some merit to, you know, to their beliefs. So, well,
interestingly enough, I was listening to the radio this morning and I think it was Armstrong and Getty, and one of the guys had mentioned that for us conservatives, Biden may not be quite as radical as we thought, because he may have been pandering to the youngsters to get their votes, you know, who are extremely liberal, left-wing, et cetera. And he's really a little bit more centrist, which would actually be a good thing.
Yeah. Yes.
Yeah.
He's probably the only Democratic candidate that could have won. Again. Yeah. And like the soul of the country needs healing. So even if he's a placeholder for 4 years that puts like a Band-Aid on the pandemic, and that will help economically, then and brings people together rather than fighting. I mean, foreign buyers may decide, hey, I'm not going to invest in the U.S. You know, there's so much at stake.
Yeah. Speaking of that, I mean, you know, this is something we haven't talked about over the last several months, I think, is how much foreign buyer activity is there. Because 2 years ago, maybe 3 years ago, it was China buying real estate in the U.S. and Canada. You know, you don't hear too much about foreign buyers coming into the markets. It's mostly domestic.
Yeah, it's true.
So I don't know if you're seeing much of that, but we can get into that later if you want. But going back to the election, hopefully, like you were saying, things subside and we get back to to just moving forward in the country and living our everyday lives. So.
Yeah, that's exactly right. I mean, a friend of mine was just saying she just met a friend for a hike a couple hours ago, just get out away from the election. And her friend showed up in slippers. She was so distracted. I mean, people are distracted. They're not thinking straight. And as like the soul of the nation, how about the brain of the nation? Like, let's get us back to work. I mean, I you know what I mean? I'm like more unfocused than I usually am. Yeah.
Let's get back to work and have hiking boots when we go hiking instead of sandals.
I know.
Hey, before we get to the break, I do want to catch the one thing. If I remember correctly, wasn't it Prop 15 was the one that they were trying to undo Prop 13 for businesses, basically, where the real estate taxes would go way up?
Yeah.
And that got defeated, correct?
I'm not sure. I know 21 was defeated.
Yeah, we'll have to look that up during the break and see.
Yeah, because that would be a good thing if that did not go through. You know, anytime that the government wants to just grab money, you say no. Unfortunately, Marin never saw a tax it didn't like, so I think Marin said yes.
Oh, yes to everything. Yes.
I know. I don't get. I don't get that. To the idea of just give all your money to the government and trust that they'll be good in giving it back to you somehow. Yeah, sure.
Yeah.
All right. Hey, we're gonna.
I just looked up Prop 15. If we have a moment.
What's that?
I just looked up Prop 15. If we have a second to.
Yeah, go ahead.
51.7% no, 48.3% yes.
Is it finished?
So it's finished. Yeah.
Thank God.
Yeah.
Thank you. Thank you. Okay.
Everything's so close.
I know it's ridiculous. Okay. Here we're going to go to our first trivia question on entertainment. First question: the Jupiter 2 spacecraft was featured in what TV series? All right. Call 888-912-1190. First caller with the correct answer is going to win that tanning certificate. This was one of my favorite shows as a kid. The Jupiter 2 spacecraft was featured in what TV series? Stay with us. You're listening to The Best of Investing. We're going to be right back. Welcome back to The Best of Investing. Edward Brown here along with Nam Phan and Patty Cohen. First trivia question on entertainment. The Jupiter 2 spacecraft was featured in what TV series?
I don't know.
Lost in Space?
Lost in Space!
Oh, yeah.
That was a really good show.
Warning, Will Robinson. How about that?
Danger, Will Robinson.
Danger, that's right. Danger,
great.
warning. All right, Patty, you got some stats to share with us?
Well, yeah, I just thought like a little quick off the top, what's going on year over year. We're comparing October 19 to October 20 in 4 different markets. So, for example, San Francisco, Marin, Napa, and Santa Clara. So, in all of them, except for San Francisco, prices are double digits, in terms of appreciation. So, San Francisco's up 6%, Marin 19%, Napa 18%, and Santa Clara 15%. So at the same time, though, the number of listings sold is the most, actually, of all of them for San Francisco. So San Francisco's sellers have gotten the memo, like, sell. You're not going to get the same appreciation as anybody else, and the condo market's flat, but let's get out there. So in other words, percentage of sold listings for San Francisco year over year up 37%. Marin up 14%. Napa up 33%. Santa Clara up 27%. So like all of the markets are up. And the median sales price now in San Francisco is 1.6262. In Marin, it's 1.54. In Napa, it's 842,000, and in Santa Clara, it's $1,034,000. I mean, excuse me, 1.34. So yeah, I mean, so it's very consistent all across the board. But when you get double digits like Marin County, like 19% up year over year, when the average sales price is about $1,500,000. That's, appraisers are really honestly having a hard time keeping up.
Right.
And all over the country, it's up in the same period, 32%, in volumes up 32%.
Right.
So not
So,
prices. Yeah.
real quick, Patty, you were saying I think the median for San Francisco was was over 1.6 million.
Yeah.
I think was the number you gave, right? Is that up or down from prior months?
Well, it's just up 6% from, all I was looking at was up 6% from October last year.
Okay. So it's definitely not going up at the pace that we're seeing in Marin, because Marin, like you're saying, 1.5 is crazy. That's for the average home price.
Right, and
10
we're
years
seeing
ago.
like tiny little houses going close to 2,000 a square foot. Like Sycamore Park in Mill Valley, like a grandma house that's 2 bedrooms, like $1.8 million.
Yeah, real quick, you send out a really great report. It's your Compass market report, and for those of you who are interested, Patty will give her information out later, but you should definitely sign up for this. This is a really good report. It's very comprehensive, but it was interesting because there's a lot of, presumably the bigger the home price, in certain markets like Belvedere, the longer it takes to sell a home. Because there's fewer buyers in that kind of price point. But I thought it was interesting in your report that Ross, has a very high average home value, but those properties are moving some of the fastest. Like the days on market for Ross was the lowest, 22 days on market. It's a smaller sample size though, because there's only, I think there were only 20 homes that were on the market for Ross, but it's kind of counter because Ross is, next to Belvedere, it's probably the highest average valued home price in Marin.
Yeah.
Do you know why?
Yeah, I do. I actually
Ross
have
is so
to.
attractive?
I can speak to that actually because I live in Ross and I watch it really carefully. There happened to be a lot of entry-level houses in Ross in the last few months, and entry level in Ross is about 2.4 million. If you can get something under 2.5, you're doing it.
Yeah.
So properties on Sir Francis, there's actually 4 properties on Sir Francis Drake that sold between 2.3 and 2.4, and they're very kind of mediocre properties. And but they were like got into the school district, got into Ross.
Right.
And the other thing also is that Ross is a very specific, specialized market, and sometimes people wait and they'll rent in the town like 2 or 3 years before they find that property. So on the upper end, if you're spending 4 or 5 or 6 million, you really don't want to settle. I mean, you're going to settle, period. You're just going to settle. It's the Bay Area, but you really kind of want to wait for that perfect property to come up. So I think that's it too. There was just more going on.
Yeah, like starter homes, 2.5 million. That's just
on a busy
pretty incredible. But I can see if your home is right on Sir Francis Drake Boulevard. I'm sorry, we're getting very specific on the show here, but that's there's so much traffic on there on Sir Francis Drake. It's hard to get in and out of. I'm sure, depending on which direction you're going, but to be right on that boulevard.
Yeah.
High traffic, but. Boy, that's crazy. Everything points to all of these, the activity being, just year-over-year growth is pretty incredible, and we're seeing that too at Pacific Private Money, and we can touch on that later. But later I'll have an article too. Could we see a flurry of foreclosures in 2021? So kind of bring up an article that touches on the opposite of what's happening now, and that's could foreclosures increase next year. But are you seeing a slowdown at all, Patty?
I can feel it because I'm in the fishbowl. But the first week in October, it felt a slight shift. But I thought, seasonality has been totally upended, and typically we feel a doom shift October 1st, and then of course November 1st, and then December 1st, because it's all about the holidays. But because there's remote learning and sheltering at home, it's not as much. Seasonality is upended.
Gotcha.
Yeah, and also, we're predicting this is a La Nina year, so if you don't have the heavy rains that you have in an El Nino year, more people are likely to list their property if it's dry weather out.
True. Yeah.
You'll see an early spring, potentially early spring market, unless people are exhausted from the real estate activity that's happened to date. That'll
Yes.
be interesting.
Yeah, I mean, I also think it's like sellers are getting on the bandwagon. They're hearing unanimously that it's a great time to sell, and typically it wouldn't be. So they're jumping in.
Yeah.
All right, you guys ready to go to the next commercial break?
Yes.
All right, here we go. We're talking entertainment. What puppeteer created Kermit the Frog and Miss Piggy? Call 888-912-1190. The first caller with the correct answer. You're looking to the sky there. First caller with correct answer is going to win that tanning certificate. Again, here's our trivia question. What puppeteer, what's his name, who created Kermit the Frog and Miss Piggy? All right, when we come back, we've got a couple of interesting emails for Nam and for Patty that the audience, you'll want to stay tuned to hear these questions and the answers. So again, last time for this question, what puppeteer created Kermit the Frog and Miss Piggy, excuse me. All right, stay with us. You're listening to The Best of Investing. Don't touch that dial. We're going to be right back. Welcome back to The Best of Investing one more time. I'm Edward Brown, your host, along with Nam Phan and Patty Cohen. Second trivia question, what puppeteer created Kermit the Frog and Miss Piggy?
I was looking away from my lifeline, but I couldn't get an answer. So I don't remember who it is. Patty?
I have no idea.
Jim Henson.
Oh, of course.
Of course.
Of course.
Yeah. Oh, my God.
So I always try to ask questions where you go, oh, what was it? What was it? Oh, yeah, that was it.
I didn't even
The Muppets
stretch my
are
brain.
great, by the way.
The Muppets, exactly. Okay, a couple of emails come in. Nam, one comes in from you. You'll have to give a little background to this, but it says, how often does your fund find it has to file a foreclosure?
Sure. So question is related to the properties and borrowers we have in the Pacific Private Money Fund, and let's taking a step back from that specific question for the moment. Pacific Private Money Fund is a mortgage pool fund. We provide mortgages to home buyers and homeowners throughout California, predominantly California. We have a few out of state, but people come to us when, for various reasons, they can't or don't seek bank financing. So we make loans to them. A lot of them are short term, but we also have a few longer term loans in there as well. But the average term of these loans is anywhere from 12 to 18 months. Occasionally, we'll have to file foreclosure. But even before that, in private money, you have borrowers, like I mentioned, who come to us because they can't get bank financing. It's an industry where oftentimes it's not uncommon for a borrower to fall behind on their payments for whatever reasons. But then they typically get caught up, and typically we'll work with those borrowers because we know kind of the dynamics of the alternative lending space. But there are times when, trying to work it out with the borrower, trying to get them caught up isn't an option any longer. We've sort of exhausted the opportunity with them. And we end up having to first file a notice of default and go through that process. And then ultimately, if they can't get caught up, then we file foreclosure and we end up taking the property back. Since inception, since 2013, we've funded over 350 loans and have probably foreclosed on 5. So about 5 or 6, I'd say. Currently, we have 2 of those 6 or so loans in process. So it's actually a pretty small number, 6 or so out of 350 loans that we've done. The next question people often ask is, well, what happens when you foreclose? I hear when you foreclose on a property, you're losing money. That's not always the case. It really depends on, how much equity that borrower had or has in the property, and how much we require they bring in when we make the loan to them. And that's one of the nice things about the Pacific Private Money Fund is most of the loans we have in there have a fair significant amount of protective equity. So the weighted average loan to value of loans in the fund is about 40%, or excuse me, 60% loan to value, 40% equity on the part of the borrower. So if you have to take a property back and foreclose, then there's costs of the foreclosure. There's cost of, back interest that's owed or default interest. When you take the property back, if you have to prepare it for sale, then there's staging costs, there's rehab costs, there's commissions to the real estate agents for the loan. You bake that all that in and subtract it from the sales price, and if you didn't have that protective equity, then you could experience a loss. To date, we haven't had any losses from any of the foreclosures, whether they're inside the fund or outside, because we do a lot of loans outside of the Pacific Private Money Fund. In fact, several of the loans we did foreclose on, we made a profit, which is distributed to investors. At a minimum, we've broken even. So that's what happens. And if you want to learn more about borrowing or investing, give us a call at 415-883-2150 or go to our website, www.pacificprivatemoney.com.
Very good, thank you. And Patty, a question comes in from a listener and says, do you think virtual staging will take over for actual staging?
I do think that the market share of virtual staging will grow. I mean, we basically have three parts, no staging at all, virtual staging, and regular staging. And, it used to be that really honestly, like 85% of things were not staged 15, 20 years ago. And now we have, probably 85% or 90% that are staged, at least in the Bay Area. You go to other places, it's not like that. They're living in there, you can smell the cooking smells, blah, blah, blah. But, but I mean, now virtual staging is probably maybe 2% of the market. And I've been doing a lot of it. So that being said, that's why I think it's going to grow. Will it take over? Probably not. Because here's the thing, there's the first line, well, maybe during the pandemic, but anyway, the first line of defense is online, and you can make something look amazing online, but when you go there to the property, it's still going to be vacant, or it's still going to have that red wall and the brown leather couch and shag carpeting. So there's something about emotionally, it's kind of like online dating. If you've got your photo of the glamour shot from 10 years ago, you're going to look amazing, but then when you get there, right? So
you turn right around and say, I need to be somewhere else.
Yeah, so it's all emotional. Like, you got to feel the chemistry. So when you get to the house, if you're not feeling it, it might not work. But I'm still a fan of virtual staging. Quite a fan, because the difference is, a few $100 versus, 10,000 or 8,000,
Yeah. Hey, Patty, I have a question. So, years ago, I mean, maybe that hasn't been that long ago, but, realtors would take borrowers around in their car to drive to each property, inspect it. They drive the neighborhood, because I think the neighborhood itself is as important as the home many times. Has the internet reduced the amount of, driving that a realtor needs to do with prospective home buyers? Because the discovery process, a lot of that, you can do it on their own now.
Oh, yes. It's a really good question.
So,
I mean, I remember back in the day, if you bought something like 25, 30 years ago, you'd go up, you didn't know where the realtor was even taking you. You didn't even know how much it was or how many bedrooms, whatever. So now buyers are very, very proactive, and they're very educated, and it's wonderful. It's just great.
We have to get to another break. Give out your information if you would.
I'm Patty Cohn, a broker with Compass. My email is patty, PATTI.Cohn, COHN, @compass.com, and my phone number is 415-722-4842. And I'm happy to share the report that Nam was talking about for your area, for the entire Bay Area, for each county, whatever.
Very good. All right, quick question here. What show did Mork and Mindy spin off from? That's our trivia question. Stay with us. The Best of Investing. We'll be right back. Welcome back to the Best of Investing. Edward Brown, Nam Phan, and Patty Cohn here. Last trivia question was, what show did Mork and Mindy spin off from?
I don't know. Was it Bob Newhart or something?
No.
No.
Come on.
But I don't know the answer. But
that all like that all is a cloud in my mind of
Oh no,
shows that
Happy Days.
Oh.
What?
Yeah, from Mork and Mindy. Sure.
Oh, well, I'm totally out of it.
What's wrong with you?
Bob
You watch
Newhart.
too much TV when you're little?
No, I watched Happy Days, but I never saw Mork from on there.
That,
But I
yeah,
had the Mork and
that's how he
Mindy
got.
game.
That's how he got his start.
Yeah.
Okay.
Poor Robin Williams.
Let's see here. Nom, you said you had one more article you wanted to share.
Yeah. So at the beginning of the first segment, we were talking about. I can't believe I said Bob Newhart. That's pretty weak.
Nothing.
But anyway, so at the first segment, we talked about how vibrant the real estate market is, and we've been talking about that for weeks now, if not months. But there's some articles coming out. Could we see a flurry of foreclosures in 2021? And this is out of Inman News. Andrew Duke Y wrote this, and although there's more demand for housing, there's also a higher risk of losing it, and many economic signs point to a rocky road ahead. Here's why this housing boom won't last. So this is a pundit who's saying that real estate market is potentially headed for downward in 2021. I mean, he points out the obvious, the many things we've already talked about. Real estate is up. When the economy first shut down, many were hoping for a V-shaped recovery. But as more time passed, it became clear that that's not as likely as an outcome. And with that, there are businesses that continue to be closed, and people who continue to fall behind on either their mortgage payments or oftentimes rental payments. And so he's saying that that's building up a group of people who may not be able to pull themselves out of this hole that they're digging in because the pandemic continues to, move along and we're not seeing a recovery. And he said 1 in every 12 mortgages is now past due, a delinquency rate that has not been seen in years. As of August, 90% of renters are paying rent, as opposed to 92% in August of last year. Not a huge drop, but still a signal that all is not well for tenants. And then jobless claims rose back up above 1 million this summer, and that stimulus package that protected unemployed Americans elapsed, and many were using this added stimulus to pay their rents and mortgages. So, with this, so he's saying, if things continue with the pandemic, that more people are vulnerable, as I think we all can see that. The question is going to be, how severe will the hole that people are digging themselves into? How severe will that be once the pandemic ends and things get sort of back to normal? Between now and that time, will people have no choice but to file BK, or tenants or property owners, mortgage companies? When will they have no choice but to start foreclosure proceedings? So this is one. I think this is a real thing we need to watch. At Pacific Private Money, we track all of our borrowers, and we haven't seen a significant increase outside of March and April when the pandemic first hit. But we're not discounting the fact that it could come back. Although you could say California and the Bay Area, we've been pretty good about shelter in place compared to other states where we're seeing a surge right now. So,
which, interestingly enough, even though Texas has a lot of COVID cases as a general state, people are paying their mortgages. From the standpoint like our Pacific Southwest Note Fund, we don't have any delinquencies in it. Now, we only have 22 loans in the fund, but no one's even asked for a deferment. And we just recently, literally today, I think, sent out the newsletter. First newsletter of the
nice.
fund, and everyone got their statement, and we're producing well over 9% minimum preferred return. So check that out. You can go to pacificprivatemoney.com and click on the one that has to do with the Southwest Note Fund. It's a good one.
Hey, Edward. So with the Southwest Note Fund, I mean, what's the average mortgage these borrowers are paying for these loans? Because they're not big loans. I mean, relative to California.
So I'm just pulling it up right now. Actually, there's 23 loans in there. The average loan is only $69,000. That's on the books. And
Yeah. So your average
average,
payment.
and the average we paid was only 43,000. The average monthly payment $755. So
Right.
everybody needs a place to live, and even if you're making minimum wage, you're still going to be paying. It's not like you can get an apartment in anywhere in Texas for $100 a month, right? You're still going to be
Right.
paying $500, $600, $700, $800, $900 a month.
Yeah.
So I think that's one of the reasons why it's been so successful.
Right. And here in the Bay Area, if you just give up your daily coffee and donut habit, that covers half of a monthly mortgage in Texas.
Yeah.
Right. Yeah. So people are going to make that payment. I mean, I can see why people would not stop the payment, because that's that and their auto payments.
Yeah.
Are probably the two payments that they would make. So,
exactly.
Good to know. We have a fund event coming up. Speaking of the Pacific Southwest Note Fund, and we're talking about the Pacific Private Money Fund earlier. So in November 18th at 6 p.m. is our next fund information session. And again, we'll cover all of the 4 funds we have. If you want to register for it, go to pacificprivatemoney.com and the events page. I spoke with an investor yesterday and said, hey, I sat through those. I would also love for you guys to have a dedicated session for each one of those funds. So we'll probably line those up as well.
That's good, yeah.
And give some more details on and go deeper into each one of the funds. We probably do the Southwest Note Fund next, and then the North Star Capital Fund after that. But to learn about all of them, and we do go through a good amount of detail, register for the one coming up on November 18th.
Yeah, it's interesting. I was just talking to a client today, a potential client. He has a couple $100,000 that he wants to put into the Southwest Note Fund. And I told him that, I said, listen, you can do that, and that's great. But just so you know, there's a fair amount of money ahead of you, and it's going to take at least 3 weeks to deploy that money. So during that 3-week period, you're not going to earn interest. So I'm not trying to dissuade you from putting money in there, because on the other side of it, if you wait 3 weeks or so and say, okay, now I'm ready to put money in, there may be hundreds of thousands of dollars ahead of you again in there. So
yeah,
he's going to seriously think about that.
That's great.
All right, let's see. We've got 1 more minute before we have to cut to our break. No trivia question. Anything you want to cover in a minute, Patty, and then we'll cut to our last commercial break?
No, not really.
Okay.
Real quick, going back to your point about that hold period where the funds aren't working for them.
Yeah.
We have a number of investors who invest with us and said, you know what, I'm investing. I just took my money out of my bank account because for 3 years it was sitting there, and I only earned 1,000 on 100,000 over 3 years.
Yeah.
So we get a little bit nervous about saying, hey, it's going to take 3 or 5 weeks, whatever, for you to start earning that 7-9%, whatever. But you got to take into account how quickly they can build up $1,000.
Well, that's true. That's a very good point. Yeah, because some people said, you know what, I'm not earning anything right now anyway. All right, stay with us. The Best of Investing. We'll be right back with some closing comments. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with Nam Phan and Patty Cohen. No trivia question, but Nam, you have a deal of the week.
Actually, deals trends of the quarter. How about that? We'll start a new one.
Okay.
No, so we, as I mentioned, we're Pacific Private Money. We primarily lend in California, but one of the things we're seeing more over the last year, or several years actually, and Patty, you could probably certainly relate to this, is we're seeing a number of people who are buying out of state. They're selling their home in California, and they're rooting themselves up and moving out of state. And we have, in the past, done loans where we've provided a loan against the property in California, and we can use those, the borrower can take the proceeds for their purchase in another state. So we do loans where one of the properties is out of state, and it's something that we're just seeing more of. In particular, we're seeing people downsizing from homes in California, in the Bay Area. And for instance, we had 2 scenarios that came in over the last 3 or 4 months where somebody was moving from their $1.6 million home into Oregon. However, they were buying a same size same loan amount in Oregon, but probably triple the property size. Another one was a $2 million Bay Area home that they were selling and then downsizing to $1.7 million in Oregon. Here's another one though, the $7.5 million in Marin, and they were downsizing to $5 million in Austin, Texas.
Wow, that's a lot in Austin.
That is. But we're going to start marketing to senior communities in other states and saying, hey, if you have a California buyer who has to sell their home first before they can buy yours, have them contact us because we can do a bridge loan.
That's a great
Really
idea.
smart.
Yeah. So
Did you
we're
come
just
up
seeing
with
more
that?
of that.
Did you come up with that idea? Was that your brainchild?
We'll see if it works.
Yeah, it's funny. We talk about the Southwest Note Fund. It's in Texas. We haven't gone outside the state. I think the reason is because in California there aren't too many seller carrybacks. And if they are, they're probably second mortgages.
Right.
Small ones behind big first. Because generally speaking, if you're going to buy $1 million house, the seller's not going to want to carry paper, and especially if the buyer can get a good interest rate from the bank, there's no reason that seller carry back.
Yeah.
That's kind of Patty, why don't you give out your information one more time?
Yeah, I'm happy to provide information for anyone. I've been a real estate broker for 32 years, and my name is Patty Cohn. I can be reached at 415-722-4842, and email is Patty, P-A-T-T-I, .Cohn, C-O-H-N, @compass.com. And it is the best time ever to sell.
And Patty's our go-to person for real estate. Nam, why don't you give out your information?
Yes, give us a call at 415-883-2150. That's our general line here at Pacific Private Money, or you can go to our website, www.pacificprivatemoney.com. Actually, I never give out my email address. If people want to email me, they can email me at nam@pacificprivatemoney.com.
Nice, simple email address. I like that.
Yeah.
NAM. All right. Here are our thoughts for the day. So I told a joke in my Zoom meeting today. It wasn't even remotely funny.
Yeah.
You like that?
I get it.
You like these little puns, don't you? I just love these puns. You'll like this one too. And 2 secrets to success. 1, never tell everything you know.
I got it.
Yeah, okay. I mean, you guys are too sharp for me.
Yeah.
All right, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing.
Of investing.
So long.